So welcome, everyone. We are so happy you are here joining us today because we are so excited to have Joel Landon with us, who is with eQRP. He's going to start off by showing you a family picture, which is going to be really cool. We love that. And he's been with eQRP, which is a 401k, and teaching us how we can self-direct our own retirement and make it grow. He is going to talk about some things of which I already have questions about: the partner club and the map. I'm calling it the map. I don't know if it is the map or what kind of map it is that eQRP has, because the map I use is on Google and it gets me from one place to another, and that's what maps do. So I'll be very excited to hear about that. And what we love about Joel is he's got this great financial background, so he can make sure that we learn how to get where we need to go to get what we want, to have it all. So Joel, take it away.
Okay, will do. Thank you so much, Peggy. And thank you all. I'm truly grateful to be in front of each of you, and the fact that you guys were willing to actually take this opportunity and hop on a call with me and learn a little bit about what we do at eQRP. I think the hardest part about learning about eQRP is memorizing like the acronym eQRP, and it stands for Enhanced Qualified Retirement Plan. So if that helps, awesome. I mean, we still have members that call us RQEP, PRQE. It varies definitely, but that's like the hardest part of being one of our members. But I'm going to go ahead and just kick it off with a few slides. I want to let everybody know more or less what the agenda might look like. I'll share maybe 5 to 7 minutes of content on slides to help drive home the message that I want to share with each one of you today. And then what we'll do is we'll open it up to questions, because I know a lot of you are going to have some questions and you're going to be curious about, some of the stuff that I share with you on this presentation. So you won't have to listen to me talk too much. And then when we get into the Q&A, it'll be much more engaging. But feel free to stop me if there's something where it's like, whoa, Joel, I got to hear about this. Feel free to use the resources like the comment section. I think there's even an ask a question button potentially that we could leverage, but stop me if you've got some immediate, questions that you want me to go over. But let me go ahead and start sharing my screen here, and we'll kick things off with a picture of my dear family. Can you guys see this first slide here?
Yes.
Good. Okay, so this is actually me and my family. Yes, I've got 4 daughters, if you could believe it. So I'm a girl dad. I know there's probably some girl dads out there, but this is like my life. This is what I think about all day long. And this is why I come to eQRP every day, and I try to be a good team member. I try to contribute to the people that I engage with. This is the reason, this family right here, these ladies are the reason why I'm in front of you today. I love each of them so much, and I just want everybody to know on this presentation that this is what drives me, is being a successful husband and father for my family. So hopefully that gives you a little bit of a sense of what's important to me as a person, so that we can dive into some of the other details here. Okay, eQRP. What is the whole eQRP mission? Well, it actually dates back to what our founder and CEO, Damian Lupo, some of you may have heard of that name before. It kind of goes back to what his mission was years ago when he went through his success to his failure of losing everything and then kind of building it all back up. It's all about breaking 1 million financial shackles. So he set off about a decade ago to build eQRP into what it is today. It was a one-man band, and he was all about breaking those financial shackles that hold people back from real happiness. So we're going to talk about that a little bit today, and really how we fit into that spectrum, and maybe how we can help you break free from any of the financial shackles that you have. Okay. So we like to think of eQRP as not just a 401k provider, but as like a system. And our system is built upon these 4 pillars: control, community, education, and opportunity. And so I'm going to share a little bit about, what that is, how it functions, each one of those pillars, and where we fit into that equation. So let me give you a perspective really quick. We feel like this is what the current financial system looks like today, or it's what most people are familiar with, right? And we feel like it's broken. So you've got a couple of things here. You have to start these asset classes, right? Mutual funds, real estate, physical metals. Those are specific asset classes that we're all familiar with, right? Mm-hmm. But you can see down the line with the traditional retirement system that a lot of us are either previously or currently engaged in, you really are limited to. You're really just limited to that first option or that first asset class, which is the traditional mutual funds, the stocks, the bonds that are, dependent upon Wall Street. And then as you go down this list a little bit more, you think about investment strategy, community opportunities. You don't really get that with the traditional system. And I'm going to talk more about like these individual asset classes. How do you get control? How do you engage in community? And how does that help you become a successful investor? But I just want to go back to what I was saying before, which was, even though the current broken system doesn't really provide these 4 pillars, we do. We give this to you, and it changes that perspective of like, okay, you've got this current broken system, but when eQRP steps in and when you engage with us.
Please leave your message for 64.
All right. Someone's calling someone. But we've got all of these other opportunities here that you can then actually participate in with the eQRP system. So just wanted to give you a quick breakdown of that. Let's talk a little bit about control. We'll go over the 4 pillars and then we'll open it up to some questions. So when you come to eQRP, one of the first things we do for you is we provide you with that first pillar, control. We build a 401k plan for you. And it doesn't matter if you're self-employed or not, if you're still a W-2 employee, or I see a chat here, so I just want to make sure that I'm not missing that. So I open up the box here. But yeah, we give you that 401k plan so that you can take control of retirement money that you have that's eligible. This is your old 401k. This is an IRA that you have with Wells Fargo Advisors. This is that 403b. It's all of those retirement plans that are eligible. We take that money and we plug it into this 401k that we build, and now you have control. That satisfies that first step. You're the trustee, you're the participant of your plan as well, which means you now dictate what you want to invest in with your funds, as long as it's eligible by IRS standards. And we can get into that a little later. The control, again, going back to that plan that we build for you, gives you the chance to do that rollover, to make contributions if you are self-employed. That's what's really unique about these plans, is if you fall into that really special bucket of, hey, I'm a small business owner. Well, guess what? We can show you actually how to make contributions. So now you have some tax write-offs and some deductions and deferment. And then lastly, you're the administrator. So you get to go in and you get to make sure that you do the proper filings with our support. You get to track all the transactions to substantiate what you're doing. So we provide all of this to you. Moving on, let me move forward here.
Stansberry.
All right. Was somebody asking a question there? Cool. All right. Opportunities. Let's talk a little bit about opportunities. So one thing that's really unique about us is we decided to create opportunities for our members to actually get involved in, so that we can show them, especially if they're new to the game, how to become a successful investor. So we have a couple of options that are separate from all of the other options out there in the real world. We have My Gold Advisor, a company that we built that is all about educating you on precious metals and how to hold metals in your 401k plan. We also have Vitruvian Ventures. which is a private equity company where we manage our own funds for our investors. So we give all of our members who join eQRP the chance to learn how to be a good investor through our very own opportunities. Or, we could position you in front of other opportunities outside of our company, but are within our network. Kind of tying into the education and community piece of what we have to offer. So Peggy talked a little bit about MAP. We call it Millionaire Action Plan. So it's definitely not like a map that you use to go to the grocery store, but it's definitely going to help you kind of navigate your world, your financial world. And what we do is just like it says here, we educate you and we empower you so that you make good financial decisions, because we want you to be a successful investor, but we also want you to be successful with your W-2 money, with some of your future goals and investments. And then the other piece is the community, which is tied to Partner Club. And I know Peggy brought that up as well. So we built a club or a group that allows our members who want to be engaged to reach out to their network and become thought leaders. We're trying to help build you up to become successful investors so that you can go out and be thought leaders in your own community. And when you share that with your community and you show them, hey, this is possible, like you can become a successful investor too, let me show you how. You bring them into our network and we take care of them just like we take care of you. And of course, we're going to incentivize you. We're going to say, hey, thank you so much. Let us reward you for your hard work. So it's a great way for you to not only like contribute and share with your network and community, but also a way for us to incentivize you. Okay, we're going to wrap this presentation piece up with just steps to success. This is how easy it is to join eQRP and like become assimilated into our ecosystem. First, you just have to have investment goals, which I'm sure the majority of you here on this call today have. You are looking for an opportunity to make it big in the investment world. And second, you do have to have eligible funds. So that's typically money that you would roll over from an old retirement plan. And when I say old, I'm talking about typically when you do a job change, you left a 401k or you left retirement money and put it into an IRA after you left that employer, moving on to your new employer. Those are eligible funds. Now, if you're a small business owner and you may not have eligible funds to roll over, well, when I say eligible funds for a small business owner, those are funds that you can contribute, which is basically your self-employed income or revenue as a profit sharing contribution from your business. And again, we can get into all of the nitty gritty as time goes on, but those were some of the things that I wanted to share with everybody today. I'm going to stop sharing here and I'm just going to open it up. Peggy, I know you're probably still there, but any questions?
Doug Listow has a question.
Joel, can you share with the folks what's the primary advantage of eQRP versus self-directed IRAs?
I would say the primary advantage, Doug, and that's a good question because a lot of people are kind of thinking, which one should I be with? Like, who should I use? Should I use an IRA custodian or a 401k provider like eQRP? Well, there's a couple of reasons why we feel you should go with the eQRP versus the IRA. The first, the IRA requires you to have a custodian. And that in and of itself comes with a little bit more complexity, not a ton. I used to work for a trust company, so I have a really good idea of the differences. Look at that. Angel wrote checkbook control. That's another one. Absolutely. So with the 401k, it's as simple as having a checking account owned by a trust. That's what we build for your retirement trust. And you're the trustee, which means you just have direct access to that checking account where you can move money back and forth from investment to account to investment. IRA custodian's a little bit different. They got to get a little bit more involved. Sometimes there's more higher priced ongoing fees with the IRA custodian, but there's also a really big one. And it's a tax that's related to leveraged real estate investments, which I know a lot of us are involved in. I myself, like, we invest in real estate because we know that we're going to get a positive return almost always. at least much better than what we were used to in Wall Street. However, with an IRA is subject to different IRS tax code. And so your gains are going to be taxed. Whereas if you were to invest with our 401k plan in leveraged real estate, it's not taxed. It's not taxed like an IRA is. And the tax that I'm talking about is UBIT, unrelated business income tax. That's triggered by UDFI. So there are some advantages certainly to having the 401k versus the IRA, and those are a couple of them. There's more, but great question, Doug. Did I answer that okay?
Absolutely.
Cool. Great question. What else, you guys?
Well, I'd like you to tell me what the map is. And then I'd also like you to tell me if you have a personal IRA and you have a business, what can you roll them together or, you know?
Good questions. Great questions. So, MAP is really cool. So we like to think about MAP, Peggy. First of all, it stands for Millionaire Action Plan. And that's an acronym or like a title that Damian Lupo developed a little while back when he first, started eQRP. And the vision was to develop action plans and action items with our members so that they can walk away feeling a bit more empowered with some ideas to become financially successful. So we're not financial planners. We don't plan out your whole financial future for you. We actually like to consider the Millionaire Action Plan as more of okay, we're going to connect with you and we're going to be your financial sounding board in 3 1-hour sessions. And it all starts with a questionnaire. You fill out a questionnaire and we ask you a ton of questions like, hey, what are your financial goals? What do your assets look like, both liquid? What are some of the, investments that you currently have? So we go down this long questionnaire and get a good idea of what you're currently doing. And then we help be that sounding board as we deploy some actionable items to make you successful. So that's what MAP is in a nutshell. We have some members that enjoy it and get involved. And the other question that you had is, yes, if you have an IRA, if it's a traditional IRA, you can actually roll that into our 401k plan that we build for you. However, if you have a Roth IRA or an inherited IRA, those are actually 2 plans that can't roll into a 401k. In fact, they're like 2 of the only real plans that you can't roll into an IRA. Into our 401k. So I would say, maybe 1 in every 35 interactions that we have with people who want to become a part of the eQRP ecosystem, they just have a Roth IRA. And unfortunately, we can't roll that over. So we try to strategize with them and give them some help to kind of move forward and be successful. But yes, if you're a small business owner, Peggy, I know you were asking that as well. That's a really big benefit because now you could take some of your business revenue and you could actually make contributions into your eQRP plan as a profit sharing contribution. And those maximums, they vary year over year. IRS is continually increasing those maximums. But what we always tell our members is, because some of our members will say, well, what is the exact amount? Like, how much can I contribute? And there are some percentages, and it's based on how much revenue is obviously generated. You do want to just double check all of that with your accountant, because they're going to look at your taxes, they're going to look at your income as a business, and they're going to help you determine how much that should be. And then, of course, you can make personal contributions as an employee up to the maximum. And again, that increases year over year. There's some catch-up contributions. So I would say maybe 8 out of 10 of our members are not small business owners. They are W-2 employees. Mm-hmm. But that 2 out of 10, they are small business owners. And guess what they're doing? They are maxing out their employee contribution each year, and they are maxing out their profit sharing contribution. And in addition to that, their spouse is eligible to do the exact same thing to that plan. So they're both maxing out their eligible contributions. And then each year they're taking, which is almost over, it is over $100,000. It's like $120,000 combined, and they're reinvesting that year over year. For some, right? That may not fit everybody's situation, but that's a lot of our members. Did I answer that question okay, Peggy?
Almost.
Tell me more. Ask me.
Oh, just so I didn't quite get, I heard Roth, but I didn't hear. So if you have a business, you're going to contribute to a traditional 401k because you want the tax write-off. But then how do you get it out of there? Can you roll it into some sort of a 401 Roth?
You don't want to roll it out. The moment you take that business profit sharing contribution and roll it into the plan we build for you, you want to go invest that. So you keep it in your plan. And then from there, you go find your investment. We can help you find some. We have investments.
We have hundreds, thanks.
There you go. So perfect candidate in your group would roll over profit sharing. Sorry, they would, if they have money to roll over, they'd roll it over. But then they could take their business profit sharing contributions, make that contribution. They could take their employee contributions, make that employee contribution. Now they have a plan, a 401k plan that is built up with a ton of funds. And then they come to you, Peggy, and they say, hey, I'm ready to invest all of this money. Now they're investing in the name of that entity, which is your plan.
But they owe taxes on everything. If it's in a Roth, they don't owe taxes.
You're right. So
what they rolled, but they have
the choice to do a few things. Okay. So Peggy, when they make those contributions, they can make those employee contributions. They can make them after tax or they can make them pre-tax. And it's going to depend on so many scenarios. Like, let's just say maybe Gary's contributions are all going to be pre-tax, which are just tax deferred. He's going to pay taxes on that later. Whereas, let's just say Fred, his were all after tax. Both of them did this strategically based on their financial goals, right? They may not want to have any taxes at distribution when they retire. So they decided to make all of their contributions Roth so that everything grows tax-free and distributes tax-free. Whereas Fred, for him, he wants to take the tax deferment. He wants to come in at a lower tax bracket. So he's going to make contributions that are pre-tax so that he doesn't have to show as much income on his 1040 when he files his tax return.
Well, if he works with us, he's going to be in big trouble because we'll make him way too much. He'll make too much money and be
right. So,
so how's that going to work for him?
We want everybody, honestly, we want everybody to make after-tax contributions if that fits their needs. But what some people typically will do is they will just convert that money when they'll do an in-plan conversion.
Right.
So, which you can do with our plan. And a lot of folks will roll over pre-tax money. I mean, it could be 300 grand that they rolled over from an old 401k that's pre-tax. And they're sitting there, they're ready to invest. And now they're asking, wait a minute, I'm going to get like a 2x return in 3 years. Like, what's going to happen when I distribute all this money? Like, am I going to get taxed on that? And we tell them, yeah, absolutely. If it has not been taxed, you're going to pay taxes on this at distribution. So then we connect them with someone who could do tax strategy. And now they've got this plan where they can start making conversions over time, maybe spread out over 10 years so they can afford it. And then, yes, when they get to that point at retirement, we want them to take distributions tax-free. We want their gains to be tax-free, but it just depends on everybody's income and tax situation. It's so different for everybody.
Yep. We check on all of that. So Cliff, and then Karen, what happened to Nika? Nika had a question also.
Yeah, I've got a few questions real quick. It sounds like that there is a Roth component in this. Can you actually set this 401k up so that if you wanted it to be tax-free growth, you could actually have a Roth component built in it?
Yes, you're spot on, Cliff. So
fantastic. Yeah.
You don't get
the income depreciation, but you you'll actually get the tax benefit on the other side. So I think that's great.
That's exactly right.
Yeah,
And
that was my same question. And then she kind of did it before I get asked that about the Roth. Yes. So
yeah, that's perfect. We've built a ledger because, when you start doing that, you want to track it well. And so we show you how you can track that with a ledger that we built for our members to segment everything and keep everything straight, because, depending on how many assets you have and which is the Roth and which is the pre-tax component, you want to have all that straight. So we show a lot of our members who are new to all of it, we show them how to make that happen.
Nice. My next question is, and I may know the answer, but I kind of want to hear yours. How do you compete with an employer-based 401k? So if someone already has an employer-based 401k, I mean, granted, the 401ks last year didn't perform very well. They lost about 23%, which they're going to have to earn back, I think, 31% in order just to break even. Not realistic for most 401ks. So how do you really compete in that space when you have an employer match versus what you're offering?
Yeah, really good question, Cliff. And I would drill it down to just this one point of diversification. Most folks, if they've done the homework, and some, we try to show them to prepare yourself for like an economic downturn, or like if there's economic uncertainty. A lot of people are concerned about that. They've lived through it in portions of their career. We preach diversification, and it's hard to do that in a company sponsored 401k, right? They're used to really just kind of sticking to a couple groups of mutual funds, and you can't really get out and explore all these other asset classes. So, a lot of folks know that going in, they're like, how can I diversify and prepare myself for economic uncertainty? I need to go find someone like eQRP so that they can then break out of that little shell. And now they're dealing with these asset classes that they know over time have been successful, but it's like they're feeling better about it. Okay, I'm set up now because I'm spread across multiple asset classes, rather than just like sitting in this bucket that I'm really like dependent upon Wall Street and like what like this specific like asset is going, how it's going to perform. And so I think just going that route alone, Cliff, gives a lot of people peace of mind. Like, okay, I'm glad I found you. I'm glad I'm going down this path.
Very nice. And do you have to screen the opportunities that they are able to invest in, or can they choose to invest in whatever they want to bring into that on their own?
Yeah, we don't screen it, but what we preach early on, we have probably 3 one-on-one, very like hands-on conversations with our brand new members to show them what's eligible and what's not. Because we at least want them to walk away with like, okay, verbally, this is what you can and can't do. And then on paper, you've got to have this in your back pocket when you make your decisions, so that okay, I can't go invest in antiques, or I can't go invest in my father's small business because those are disqualified. But as long as I'm staying within those guidelines that are defined by the IRS, you could go look them up if you wanted, I'm going to be okay.
Last question. Thank you. So RMDs, is it for anyone that's you're in the 70 right now, is it going to be 73 for RMDs with the 401k?
Yes, that is correct. And yeah.
Okay. Thank you. I appreciate it.
Thank you.
Right, Karen, you're up.
Questions.
Okay. We're a married couple who have sold our businesses, and one person rapidly approaching 65 and the other one is 72. And our tax accountants told us that, well, after you're 65, you don't have an IRA anymore, just cash it out. So my husband has no more IRA money. Mine is small, but invested in like mutual funds and with a financial advisor. So are we somebody who should be working with you? Is it true that, it's like IRAs or 401ks are, that's not for us. When you get to a certain age, forget about it. How do we?
No.
I love your question,
We
Karen.
need to be talking, Karen.
Well, nobody tells you this. And you listen to a financial advisor or you listen to an accountant who goes, well, why do you need a 401k? And we sold our businesses. So we have income from those businesses that is not 401. It's like, what do you do with that? Pay 40% of it to the government and nuts to that.
Think about, Karen, what financial advisors push.
Oh, they
what
all
we really don't hear of anymore, like we heard of in the 90s.
They always
go by a different name today.
Yeah, go ahead, Karen.
They always want you to be in what I consider basically is the stock market. It's mutual funds and stocks and bonds, and that's so volatile, and the money that is there keeps going down, down, down. And I have some real estate investments that keep going up, up, up. And I'm well, first of all, I have not dealt for a little while now with that advisor because I'm not sure that was good advice. So anyway, should we be talking to your company, and what kinds of direction where would you point us?
Yeah, I love your question, Karen, because we have a lot of members that are in your shoes. They're of retirement age, but they're still leveraging their eQRP to its fullest potential, because they have the eligible money and they may not have a need to withdraw it, but they want to maximize the potential, right? They want to maximize the opportunity. So we show them, even in like the 11th hour, so to speak, hey, you still actually have time. Like, you could totally capitalize on what you have, especially if you're somebody who wants to build a legacy, or if you're somebody who just, quite frankly, just wants to have a very particular lifestyle in their 80s. We can certainly support you with that, and we can show you how to invest with the money that you already have, using our system into the unique asset classes like real estate. Like you're saying, you've got some personal real estate investments that you're loving right now. You could take that same retirement money and just duplicate or copy that same process now, rather than, like you said, just kind of letting it sit there in mutual funds that you're not as confident in at the moment. So yes, absolutely, we can help.
Great.
Thank you.
Fred?
Thanks. I had one question on one of your slides. I think it was the one that showed eQRP's list of different asset classes. I saw in there that there were a couple that seemed higher risk, maybe the cryptocurrency and the metals and minerals. I was just wondering, do you guys have the in-house experts to manage that stuff, or do you rely more on the fund managers or someone outside your organization, your group?
Great question, Fred. Yeah, I'm loving this. Good. This is a good group. We have an in-house expert as it relates to precious metals. So I actually like to refer to Taylor first. Taylor is the person who runs that division. I refer to him first as a metals educator, because a lot of people, they come into our network and they have a strong understanding with real estate investments, but they don't about metals. They've heard about it. Maybe their granddaddy told them to have a little bit of silver on the side. But what Taylor will do is he'll help educate folks on the why. Like, okay, why is it important to have it as a part of your investment strategy or your retirement strategy? And then he'll provide, if it makes sense for you and your strategy, he'll provide you the resources in-house to have precious metals. And then we have a lot that ties into that, like lines of credit and, a return on a gold-backed note. It's really unique what we put together with that business. But yes, Fred, we have the in-house expert to help with that. Now, as far as cryptocurrency goes, crypto's interesting right now. So we've kind of taken a step back with crypto. And what we would do for anybody, like you said, it is very volatile, but what we would do for you is we would help set you up with what we would say is our preferred wallet with your plan so that you can feel like, okay, I'm in the system with my eQRP plan and it's seamless. But you do have to make the decisions on your own. You've got to manage the trading of that cryptocurrency. You've got to educate yourself on the whole process. And, most people who come to us for cryptocurrency or want to invest in that asset class are typically really educated. But those who are like, I've heard about it, I don't have a lot of, understanding of it, we'll point you in the direction. We have our own social media platform page that's exclusive for eQRP members. We don't let anybody else into it. And so in addition to having people connect with each other that are members, we also post daily content on there. And we have a lot of content on there that's related to cryptocurrency for people to go and just educate themselves on it. But ultimately, they'll have to go out on their own with crypto, but with metals, we'll show them in-house.
And by show them, you mean you'll make the decisions on when to buy and sell positions, or?
No, so we won't. We might tell you, we do get that question a lot, actually, Fred. Hey, I saw gold go up. Should I buy right now? And we'll have dialogue about maybe why it might fit into their strategy to buy gold right now. But, we don't want to make the decision for people with gold and silver. We don't want to tell them, oh yeah, now is the time to buy. We're not phoning our members and saying, hey, it dropped down, X basis points, so yes, you should buy now. We're not in that space. We're more like, let's educate you as much as possible. Let's be your sounding board, because this is really all about like you taking control, you getting educated, you making the decisions, and you becoming a successful investor rather than depending upon somebody else to tell you what to do.
Are you allowed to advise?
No, I mean, we're not executing on any transactions at all, but we'll certainly tell anybody why we think that it should be a part of your investment strategy. But no, we won't advise you on, hey, now's a good time to buy because it's low.
And are any profits or losses generated inside the eQRP plan? Are those, I don't want to use the word trapped, but are they contained inside there so that, if they're gains or losses or short-term versus long-term, do they stay inside that plan, or are they eligible for use outside the plan, or are they taxed outside the plan?
Good question. These are tax-exempt plans. So there's no tax. There's no taxable event until you distribute. Okay. So, your question is really good, because you might take a massive loss. You can't leverage that for like a potential offset with your personal taxes or your business, taxes. So really good question, but all of those taxable events don't exist. You take a loss in your plan, you just take a loss. Right. You have a gain, you take those gains in stride, and it isn't until you start to distribute that you're going to create a taxable event, and then that triggers everything else.
Okay, great. Thank you.
You bet.
Is that it, Fred?
Yep, that was all.
Okay, Douglas and then Jonna.
Joel, a couple questions. First question, would you agree, and again, Peggy and I got into this a little bit this morning, which was really fascinating. It's kind of a high-level, geeky lawyer thing that I want to do. Would you agree if they decide to regulate self-directed IRAs and IRAs more tightly, that because it is under the 401k, and again, I'm being a black helicopter conspiracy guy here.
Yeah. Because
Wall Street pushes the IRA or the 401k market so much more influential on that side, I feel like personally, and this is just my personal view, that they are way less likely to have any changes on the 401k side versus the IRA side. So I feel like if you're concerned about regulatory risk or changes in that, I feel like the IRA side is much more subject to it. And I'd be curious about your point, your question, or take on that.
Yeah, this is like my doctrine, doctrine by Joel Landon. It's like, I agree with you, Doug. Totally. I almost feel like they wouldn't want to disrupt the corporations don't want to disrupt the 401k structure because it's all about maintaining that company sponsored process, that company sponsored retirement plan. Whereas, like you said, Doug, it's very different when it's on an individual basis, and the individual is, kind of in control and whatnot. They're making contributions that benefit the individual, when in reality, the company sponsored 401k is all about pumping money back into Wall Street's system. So I agree with you. But again, that's just my perspective. And I'm not the only one that believes that.
I'm going to bring a class action suit against the United States government if they do that. Because that's one more reason that they're making people broke. And I don't think they have the right to do that. And I think that's against the Constitution. And I will send their asses off.
Certainly hope they don't, Peggy, but I'm just if there's any concern about regulatory changes, that to me, I feel like there's much more risk on the IRA side personally.
There's right, because there's billions of dollars that belong to the personal person, where there's billions of dollars that versus the billions of dollars of the corporation.
Right.
Yep.
So that angers me to no end. You have no idea how angry that makes me.
No, man, we'll talk. We'll continue this discussion.
It's funny you bring that up. There's a reason why corporations and they're trying to keep people or participants, I should say, stuck in one system. Whereas, the IRA or the self-directed 401k allows people to start making choices. And so it's really what we're all about. It's like pulling back that veil and showing people, well, there's a way that you can do maybe both. You could participate using this really unique tax code, which is the 401k, but you get to do it your way. And so we just show people how to do it, leveraging, their own plan that they develop to pigeonhole you, if that makes sense.
I don't know why they think they have the right.
Mm-hmm.
Is that it, Douglas?
No, I had one comment, and I think Joel and I talked about this before, but I kind of want to drive this home like a railroad spike.
Nice.
Loved the Spider-Man movie, and one of the great quotes from Spider-Man was, "With great power comes great responsibility." You are a portfolio manager when you take this on, so I think that's one only caveat I have for anyone considering this, is that you by de facto are a portfolio manager at that point. So there's an education that comes with it. But that's my
great point
on that.
Great point.
Thank you, Douglas. Jana.
Hey, well, I'll segue right off of his last comment. That being a 401k, I'm assuming now that your RMD's requirements are specific, right? That's one of the advantages of an IRA versus a 401k, is you can take out of whatever IRA you want. But when you have a 401k, you have to take RMDs from every single 401k. Is that true for this as well?
So it's my understanding that is not, that you just have to take a required minimum distribution. I see Peggy shaking her head. Maybe she can provide more insights on this, but you're required to take a minimum distribution based on your age and the total value of all of your retirement plans. So I'm not a tax expert. I don't have like that in front of me or memorized, but maybe Peggy can provide some insight on that.
Well, I'm not a tax expert, but whatever the total amount is, you need to take your RMD, and you can take it from one account or several accounts. It's up to you. It's your money.
Yeah.
And they'll do a 1099 or 98, whatever number that is.
Yeah, 1099-R for that distribution.
Right, which will show that you took the right amount based on what your total is. Because now the IRA companies are sending the information to the IRS about what is in your IRAs, I presume in your 401s also, right? Did you have to report to the IRS what was in each person's account?
You do. So the 5498 is what a custodian would require, would have to send to the IRS to report plan values. They are required to do that regardless of the plan value. Whereas your 401k, kind of like going back to like the administration side, you are only required to send them the value document, which is a 5,500 form, if it's over the value of your plan is 250 grand or more. But we do encourage all of our members to send it out, regardless of plan value. But it's only required if it's more than 250 grand.
Mm.
All right. Well, that wasn't my understanding of 401k, the difference between them, but I can poke on a little bit more. A couple more questions on your precious metals. Are you only talking, I spent some time estimating precious metals, and are you only talking gold, silver, the kind that are kind of used to store currency, or are you using industrial metals like platinum group metals, rare earth metals?
Good question. So gold, silver, platinum, and palladium. Those are what we deal with.
Not rhodium.
Correct.
And rare earth metals.
Yep, those 4 precious metals. Our volume, as you can imagine, I would say 98% of our transactions are related to gold and silver. We have some platinum, but we do have a member every now and then that is really interested in the industrial metals, but it's typically just gold and silver.
Okay. And then and this would be for crypto, for the metals, for everything. Why you said you don't offer, you don't tell people when to buy or sell, but do you have a monitoring system where members can see the current rate, like a dashboard consolidated where we can see what the rates are to make decisions?
We don't know, but don't get me wrong. We do have, Taylor would have resources that he leverages to just watch the trends. But no, we don't have a dashboard.
Okay. And then on the crypto side, I'm not as interested in crypto as I am in the blockchain itself. Do you have any other type of blockchain?
We don't, no. So we just, and I'll be honest with you, Jonna, we haven't pumped a whole lot of energy into that because, quite frankly, we don't have a lot of members that leverage our services to get into crypto. So we kind of go where the elephants are like paving that path. I think if we saw some changes with crypto, it's obviously on our docket, like it's top of mind, but I think if we saw some changes, maybe a little bit more consistency over time, we're certainly going to start thinking down that path. But as it sits right now, we just don't have a strong presence there because of the demand. It's not there. I think over time we would see something like that, though.
Okay, and then that I think you're touching on a little bit on. Can you tell us a little bit more about the community and the education and how that works? And it sounds like somewhat the community is driving, guiding the train where it's going.
Yeah. So as far as the community goes, hopefully I kind of got that question, John. I want to make sure I understood it fully, but I'll start with the education piece. So we host education calls all the time with our members on an as needed basis. So we have a team of support team members that reach out to our members consistently and do like a check-in and kind of like a relationship manager. And if the member is in need of having some kind of an investment strategy conversation, they'll connect them with me. And then that's when we kind of go through their goals, what they've been doing, what offerings they've been looking into. And then of course we bring them up to speed on our current offerings that they might be interested in. So that's where some of that education comes in, but also on our community page, we call it Badger Tribe. And that's where it's a driven by you, the member site where you can connect with like-minded members and just like feed off of each other, learn from their own individual stories and success. But then we also have a component on there that's a daily post from us. And we usually post information that we think is educational that's based on current events. So a lot of stuff with Silvergate, a lot of stuff with what's going on with like the banking system in general. We posted a lot of content about that. We definitely don't like try to bring in the political aspect of what could be driving some of our economic turmoil, so to speak, but we'll touch on some of the economic issues that are taking place. Just try to educate people on what we think is like relevant to what we do. Does that kind of help, John, and give you an idea?
It does. Thank you. Thank you for joining us today, and thanks for answering my questions.
Oh yeah, of course.
Thanks, Jonna. Kurt, here's our famous Kurt with EQ. Loves
I was just I was introduced to the eQRP folks by a guy named Travis Watt over at Ashworth Capital. And the thing that's really interesting about this entire passive investing thing is more often than not, everybody wants to help everybody else, which I find to be really fascinating. And he's the guy that told me about the eQRP, and that's when I reached out to these guys. And I actually worked with Joel moving my IRA to eQRP last year. And it was sort of a hassle. And that's part of the reason why I wanted to move from the IRA. I won't tell you who it was, but, you know, from my perspective, it came down to flexibility and control for me. And every time I asked the custodian a question, it seemed like I was getting charged for the answer. And anytime you open up a new account, you know, you got charged for it. And it's like, you know, it came to a point where I needed to do something and it took days for things to get done. I don't have time for that. And these guys helped me move my IRA to the eQRP. I have learned a lot along the way. I just recently finished or completed my 5,500, which when you look at the number, he's talking about the profit sharing thing. The investments that I made, you know, with through Peggy and Nika and other folks definitely have paid off. I also have a 5498 that when I first started this thing with the eQRP, I had already opened up a gold and silver IRA through Provident Trust because the other custodian didn't have access to or couldn't put gold and silver within their program. If I had known that I could use eQRP, and if I, you know, obviously known a lot of things in advance of starting this whole thing up, I'd be a little bit further down the road. All I can tell you is everything that Joel has told you has panned out for me. I'm not getting paid a dime for these comments. And I can, but I will tell you that I've called Damien, I've called David Morris, who is, I guess, the second in command behind Damien over there, and they will pick up the phone when you call, which is phenomenal. And, you know, if I've ever had a question about anything else, you can drop them a call or send them an email, and they are very prompt to get back to you, which I find to be really helpful for me because I want to just do things and get it done. So I think that anybody that has a question about moving from a custodian to eQRP, I would highly recommend you do your due diligence and decide why you want to do it, just like anything else. But I would definitely endorse Joel and the rest of those folks because they've done right by me. They're so much better than I expected. So thanks, Joel.
You're the man.
If you guys have any questions down the road, you can always, reach out to me and ask me what I've done, and regarding the eQRP and the custodian that I had before, and I'll definitely help you out and answer any questions you've got. So don't worry about that. But I am really pleased with the process, and I like the control that I've got. I like the fact that I can write those checks, but I'm also got to be I've got to be concerned about the mistakes that I make because I can't blame anybody else anymore. If I make the mistake, it's mine. So
we try to help you avoid the mistakes. That's for sure.
That is true. They do. But the thing is, it's just, you know, they are very willing to help, and I really haven't made any mistakes. It's just if I made one, it's in regards to I guess the end of year contribution, because my accountant didn't know how to handle it, and I had to go back and do all the work with the help of some folks at the eQRP, send it over to my accountant, and then he takes that information and drops it into I guess my tax forms, and son of a gun, it helped quite a bit. So if you guys have any interest at all in regards to maximizing contributions, I would highly endorse the eQRP folks. I'm done.
Thank you, Kurt. Thank you. And he was not paid for that at all.
Not at all. Not at all.
And Kurt, that's a very generous offer. Thank you very much for that. And I believe to do your contribution at the beginning of the year instead of scrambling at the last minute. Same with the RMD. Think about taking it earlier, because when everybody's scrambling at the end of the year, you may not end up getting your RMD, and you're going to have a problem with the IRS. They're just very unhappy when people don't stay within the timelines like that. So we're at the top of the hour. Does anyone have a last question before we end, before we say thank you to Joel? Okay, well then, Joel, thanks so very much for coming on. I know there were a lot of questions.
It was a pleasure.
There probably will be a lot more questions. So if you want to get a hold of Joel, give us an email and we'll send you over. We'll do an introduction.
Right.
If you want to have a conversation about commercial real estate, and we love talking about how you don't have to pay taxes, but make lots of money, give us a call. We'll set up a time to talk to you, because we love real estate, especially commercial real estate. I don't think there's anything better in the world. But that's just my own opinion, and that's where I live. My life is in real estate. And all those other things you brought up are just, I'm not that interested, because I already learned, don't leave where your expertise is. You could be stepping into a hole. So make sure you have the right people mentoring you and coaching you so that you don't step into those holes. I think that's super important. Wish I had some before I did that big, huge hole I jumped into. Didn't mean to. So thank you very much, Joel.
Thank you, guys. It was a pleasure. Again. I will. Take care, everybody.